All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Wednesday, everybody. Today is April 16th, 2025. Man, a lot has happened since we last got together. The news cycle, it's moving really, really fast these days. Blink and you missed it. By the time you hear a story, for all you know, that story may already be irrelevant. Turns out that was true with a big story that came out a week ago. More on that in a minute. But let's talk about the big one. What's going on in the title here? Nvidia getting slammed this morning. A $5.5 billion charge will appear on their next quarterly earnings report because of a de facto ban on sales of their H20 chips to China. Now, this is pretty crazy because the H20, we just found out a week ago that Nvidia had, Jensen Huang went to this $1 million dinner at Mar-a-Lago. You know, he sat down with the president, $1 million buys you an audience. And then all of a sudden, Nvidia's like, okay, you guys are clear. You can sell these H20s to China. And Nvidia stock did pretty good on that news. Now, here we are a week later, total 180. Like that whole, remember that whole thing we said last week? Forget all of that. Now it's the exact opposite. And, you know, I've been saying since this trade war really blew up, since Liberation Day, I've been saying, guys, be so careful on your leverage. The news cycle is moving so fast. If your plan is to like, oh, I'm just going to hold my stock until such a thing happens and then I'm going to sell it, by the time you hear about it, it's already over. So just be really careful there. The H20 was NVIDIA's custom chip. It was designed specifically to comply with the export controls. I mean, this was a chip made for China. And then all of a sudden, Trump just says, nope, can't sell it. You know, the rules, the company was actually notified on April 9th, the same day that story ran, about how they were all clear to sell them to China. I mean, I found out there's this post from Walter Bloomberg that says the company found out on April 9th. That was the same day that everybody was talking about this. So, I mean, as soon as that article was released, it was already obsolete. And the opposite was true. The company didn't tell their customers. They pretty much didn't tell anybody. And we just found out yesterday in an SEC filing about this $5.5 billion charge. Now, they're going to lose about $12 billion in revenue, what they were expecting to sell on these chips. This is a big deal, and it is sending NVIDIA stock lower this morning. Now, that's not the only thing that's sending NVIDIA stock lower this morning. We also got earnings report from ASML. That's the big British semiconductor manufacturing equipment manufacturer. They make the stuff that makes chips. That's ASML. They reported their earnings and a big miss on their bookings for the first quarter. Now, bookings, that is future orders of semiconductor manufacturing equipment. So people like Taiwan Semiconductor is their biggest customer, right? These guys sell the equipment that goes into Taiwan Semi's factories. And they were expected to report about 4.47 billion euros worth of bookings. They only reported 3.94 billion, a big miss. So the people who make chips are scaling back their orders for factory equipment. What does that tell you about anticipated future demand for semiconductors? Well, it tells me that it's already peaked and that it's heading lower in the future. And that lines up with some of the stories about Microsoft canceling data center projects. A lot of the stories about the AI bubble has already peaked and that it's starting to deflate. Well, those worries are coming back to the forefront on top of the trade war concerns this morning after ASML reported that big miss. So semiconductor stocks are getting clobbered this morning. Rough morning so far for the NASDAQ. Not as bad as we got last week, right? Not some of those like 1,000-point down days, at least not yet. Let's not rule it out. But we do have some pretty rough selling going on in tech this morning. Now, also, the rumor mill was running crazy last night. There was a story in Bloomberg that basically was an anonymously sourced story. People familiar with the matter, a guy who knows a guy, my brother, sister's, cousin's, uncle's former roommate, said that China is willing to talk, or at least they're suggesting that China is willing to talk as long as U.S. officials show respect. In other words, as long as President Trump plays nice in the sandbox, the Chinese are willing to talk. This came out last night around 4 a.m. while we were sleeping. The market and futures start to rally about 250 points on that news. And then a couple of minutes later, there's a story in Newsweek that says tariffs on China are going to 245%. Okay, Does it matter? Does it really matter? They're already 145%, make them 245%. Let's round up to an even thousand while we're at it and just get it over with. It doesn't matter, guys. Tariffs these high are basically trade embargoes at this point. Anyways, on this news, it turns out it's based on something that was released yesterday, buried towards the bottom in a White House fact sheet that says tariffs as high as 245%. We'll look at what that actually said. The market dropped, gave up about half of those gains on that story. So, a lot happened while we were snoozing, guys. A lot happened since we got together yesterday. Some other developments going on. The oil market, the world, I think it's the Energy Information Administration. I forget which organization, but demand estimates for oil have been lowered sharply for next year. The market is pricing in this trade war. The market is starting to realize we're going to burn a whole lot less oil if global trade is going to grind to a halt. And this is happening just as the Saudis and the Russians, OPEC Plus, are starting to flood the market with new supply. They put a lot of these production curbs in place in order to support prices during COVID. You guys may remember in 2020, prices actually went like negative $30 a barrel. You had to pay to give oil away because there was nowhere in the world to put it. All the boats were full, all the tanks were full, everything was full. So they put these restrictions on the supply of oil that supported prices. Now they're trying to roll back those restrictions right as a global recession hits. So ultimately, we're looking at a market that is flooded with oil. Now, we have a strategic petroleum reserve that needs to be refilled, thanks in no small part to the dumping of the SPR to support poll numbers. So once that is done, we're looking at a supply glut. And there's something related to the trade war that I want to talk about in that regard. We'll get to that article, and I'll tell you why that kind of rubbed me the wrong way. And, of course, guys, who could forget gold? $3,300. The shiny has broken another milestone. I remember a few weeks ago, I said, you know what? We're at 3,000. I think we're going to stall here. This is a big psychological level. We're going to trade sideways up and down a little bit for a little while. Nope. Straight through 3,000, straight through 31, 32, 3,300 this morning. Appetite for gold is insatiable right now. The world doesn't know which way is up. The administration can change on a dime. You've got a dictator on one side of the pond screaming over at an unpredictable, volatile administration on the other side of the pond. Which is which? Probably depends on your political affiliation. But the market has no certainty. And in times of uncertainty, the market looks for safe havens. And right now, the bond market not really behaving like a safe haven. That leaves gold as the only safe place to park your money. And the price of gold is ripping once again this morning. We got a lot to talk about this morning, guys. Why don't we shrink my big melon of a head and let's see what's happening in the indexes. And don't forget that like button and that subscribe button if you're new here. We do this every day, so come on back and have your coffee with the melon heads tomorrow morning. And one more time, I might just mention that we are now on Spotify. The shows will be uploaded just after the live stream ends every morning on Spotify, so you can get your fix from Nobody Special via X, via YouTube, or via Spotify. Now, right now, we have got the S&P 500 is down about 60 points, 1.1% lower. Now, I want to show you that this you're probably seeing, like WTF happened here. 4 a.m., we spike up, and then we give back about half of it. So real quick, I want to take you through what caused this ruction, we'll say. There was a ruckus in the markets, and no, I cannot describe the ruckus. But it starts around 4:25 a.m. Eastern time. So what happened there? That's when we got this article in Bloomberg about 4:25 a.m. Eastern. China open to talks if the U.S. shows respect and names a point person. This came out. It was actually originally published at 4:27 a.m. Eastern time. And it's basically saying, like, you know, hey, Orange Man has to stop saying mean things, and they have to put somebody we like in charge of negotiations, and then we're willing to talk. Now, this was viewed by many as maybe a sign of weakness, or at the very least, a symbol or an olive branch showing a willingness to talk. This was the first display of any kind suggesting any willingness to talk on this part of the Chinese. And so when that story broke, the markets ripped about 250 points in a span of about 20 minutes. Now, then what happens around 440? You see, the market gets back at about half of those gains, about 150 points. That's when this story broke in Newsweek. And you can see the timestamp here at 4:32 a.m. China now faces 245% Trump tariff. And this was news to people like, what WTF? I mean, again, does it really matter? We're looking at 145, 245%. Nobody's paying that. Nobody's buying any of this stuff. Well, that story took the market right down. Now, the source of that story, it was very wishy-washy. Nobody really knew where that came from. It looks like the source of that 245% number is this fact sheet that the White House put out yesterday. President Trump ensures national security and economic resilience through Section 232 actions on processed critical minerals and derivative products. Now, this is a long-winded, there's all kinds of stuff in here about rare earth elements and all these other things. And then all the way down towards the bottom, you get this line item in here that says China now faces up to a 245% tariffs on imports to the United States as a result of its retaliatory actions. Now, that up to 245%, that doesn't mean that the prevailing 145% number was just arbitrarily raised by 100%. What they're saying is for certain items, like if there's an extra tax on steel and aluminum, that is on top of the 145%. And if you take the worst example of an item that has sector-specific tariffs, in addition to the reciprocal tariffs, and then some other double secret tariff on top of that, who knows what it is, you can get, in certain instances, to 245%. So it looked like the timing of this, the Newsweek article came out at 4:32 a.m. That is what set off this little sell-off. And now, of course, we're down a little bit lower here now that the market is waking up and digesting all this news about Nvidia. So, the point here, guys, is the rumor mills are running wild. People are just grabbing things, slopping up the headline. Markets are moving hundreds of points. Just be careful. I keep saying that. Be careful on leverage, guys. You can be wiped out in an instant here. Now, the Dow is doing something similar. Same shape chart here. It is lower by 146 points, 0.36%. It's actually a pretty muted reaction considering some of the volatility we've seen in recent days. And the NASDAQ is leading the way lower, 329 points, 1.75% lower. That is being driven largely by those Nvidia report of the $5.5 billion charge and the ASML bookings. The NASDAQ is not liking that. Now, let's just look overseas what's going on in Europe. We've got the DAX, the German exchange, is down by about 0.5%. The London FTSE exchange, minus 0.37%. The CAC 40 is off by 0.7%. In France, the Spanish IBEX off 0.25%. So Europe was lower across the board last night, albeit just a fraction of 1%. Now, over in Asia, we had about a 1% move lower in the Nikkei, the Japanese index, and the Chinese indexes were kind of mixed here, up 0.5%, down 0.85%. Again, the Chinese national team is buying their own stock market to prop up prices, so I don't really trust any of the movement in Chinese stocks at the moment. Looking over at the U.S. dollar, it's a little bit weaker here. Actually, a decent clip weaker, 59 basis points lower after strengthening a little bit yesterday. We're now down at 99.57. Another thing to watch, as always, is the Japanese yen. We are still below 143 at 142.6 this morning. That's a little bit lower. Guys, I'm starting to hear a lot of things about insurance companies in Japan and liquidity events in Japan. In the middle of the night, we're seeing these momentary glitches in bond prices and, obscure markets like the 3-month to 6-month, things that on a normal day might be dismissed as misprints or glitches in the reporting systems, but it coincides with trading hours in Japan. So I'm still not convinced we are out of the woods in Japan, even though markets had a good couple of days late last week. Pay attention to what's going on there. I went looking for specifics. I didn't find anything. There's rumors that the BOJ may be injecting liquidity here. I did see some talk that the Bank of Japan was willing to step in to support markets if things get worse. Just keep one eye on Japan, guys. That is one of the biggest risks to the market right now. And as long as the yen is down here in the low 140s, we could easily see this spiral into a disorderly sell-off, especially in U.S. tech. Looking over at the bond market, we've got a mixed bag this morning. Not much movement going on. The 30-year yield is higher by 1 basis point, 4.787. The 10 years up a fraction of a point, 4.327. The 2 years at 3.805. That's down by 2 points and change. And the 1 month is at 4.305, up by almost 1 point. It's a little too quiet. Not gonna lie, guys. I don't like how little movement we're seeing in bonds right now. Considering what's going on with the Chinese might talk, might not, 245% rumor, Nvidia, the stock that's propping up the whole market, having trouble here. You'd think there'd be a little bit more movement in bonds this morning. Looking over at commodities, though, we are seeing moves in commodities. Look at spot gold, $3,305.78 higher this morning, 2.43% to the upside. Good God, look at the long-term chart of gold. These are daily candles here, and this is just a unbelievable rally. I haven't seen anything like this since the first half of 2020. Just zoom out a little bit, guys. It has been a good year and change for gold, and it's accelerating to the upside. Look, there's an article in Market Watch this morning. Hedge fund managers are saying the gold trade is starting to get a little crowded. Maybe they're trying to create selling so they can buy at a lower price, or maybe it really is a crowded trade. As always, just be careful on leverage. Big moves here, but congratulations to the stackers who have been very patient for many years, finally getting rewarded here. Again, guys, gold ripping like this is telling us the rest of the world is not okay. All right, a big move like this in gold means there are problems elsewhere, even if you've still got people who have no idea WTF they're talking about, saying buy the dip. When gold is ripping like this, not usually a juicy buying opportunity. Let's just put it that way. Also going on in commodities, we've got silver is getting in on the rally this morning. 51 cents higher, 1.5%, $32.83 for spot silver. I like the shiny. Copper is down by about 0.2%. So we got the monetary metals doing very well, but the industrial metal not doing very well. A little bit of economic malaise showing in the commodities market. Platinum is up by 1.2%. Palladium is unchanged. And crude oil is even a little bit higher here, 1.2%. That's unusual considering what we're seeing in copper, but $62.06 for May WTI futures here. Now, let's talk a little bit about this one that I found in Bloomberg. Now, this is in the opinion column. Drill, baby, drill is drowning in oil. All right, now I'm going to skip over the lion's share of the article. They're talking about how the trade war is kind of creating some of the worst possible conditions for the U.S. oil patch because we've got worries about demand. Let me just read you some of the statistics here. Where is it? Okay, the International Energy Agency just slashed its forecast for oil demand growth by 29% from last month's projection to just 730,000 barrels per day. They're reducing their demand forecast because of the trade war, because of a global recession. And then the rest of the article talks about how drill, baby, drill means we now have so much oil, we're swimming in it, and the Saudis are increasing production, and the trade war is going to lower demand, and oil prices are going to crash. And then they're closing it out here. Let me just show you the last sentence here. Drill, baby, drill always betrayed a myopic obsession with just the supply side of the oil market. Now that Trump's impact on demand is becoming all too clear, so too is the facile nature of that well-worn catchphrase. Now, look, Bloomberg has their own leanings, right? I mean, Bloomberg is owned and run by a Democrat, so they're obviously a left-leaning publication. But the point is here, drill, baby, drill used to be used almost mockingly, right? Like the idea 15 years ago, the idea that America would ever produce its own oil was the punchline of a joke. And anybody who was saying drill, baby, drill, which was kind of like a 2008 campaign slogan for McCain's campaign and Sarah Palin, it was used mockingly. Well, I don't know if you guys may have noticed, but the whole drill, baby, drill thing, it worked. It worked really freaking well. The United States is now the world's largest producer of oil and the world's largest producer of liquefied natural gas. And it's not even close. And we're still producing even more. The Saudis launched a price war against us in 2015 and they lost. Think about that. Think about how, I mean, it was painful for the United States, but we prevailed in that trade war with the Saudis. In the span of just a couple of years, drill, baby, drill turned the United States into the biggest energy producer in the world, and we won an oil price war with the Saudis. And the point is, the same people who are using drill, baby, drill mockingly years ago are the same people right now who are mocking the idea of American manufacturing ever making a comeback. Well, gee, you were completely, entirely, totally, utterly wrong about drill, baby, drill. Just maybe it is possible to bring those jobs back. I'm not saying it won't be painful. It's going to hurt like a bitch, actually. but it can be done. If the United States can pull a 180 in the energy markets, is it really so hard to believe we can't pull a 180 in manufacturing? Or maybe, just maybe, it would be really expensive for the people who got really freaking rich off of the gutting of the American middle class. And that's why they're saying how crazy it would be, because it would cost them money. Just something I'm throwing out. All right. Also looking at Bitcoin this morning, down here, $83,600. Bitcoin is selling off along with the tech stocks this morning. That's actually quite a bit lower than we were yesterday. Also back below that 50-day moving average. Let's zoom in a little bit on that. We're kind of surfing that one down. Keep an eye on that 50-day line. The technicals for Bitcoin still looking pretty ugly. All right, let's talk about this Nvidia story. This is probably what's weighing on tech the most this morning. Nvidia warns Trump curbs on China chips to cost $5.5 billion. This was a news dump after the close yesterday. Nvidia immediately started moving lower after hours. It's down again this morning. President Donald Trump's administration has barred Nvidia from selling its H20 chip in China, an escalation of Washington's tech battle with Beijing that will cost the company billions of dollars and hamstring a product line it explicitly designed to comply with previous U.S. curbs. The U.S. government informed Nvidia on Monday. Interesting, they're saying they informed them on Monday. We'll be back to that the H20 would require a license to export to China for the indefinite future, which is a de facto ban. The new rules address Washington's concerns that the covered product may be used in or diverted to a supercomputer in China, the company said in a filing. Nvidia warned it will report about a $5.5 billion in write-downs during the current quarter tied to inventory and commitments for the chips. Now, let's scroll down a little bit here. Where is it? The new restrictions follow an NPR report that Trump had backed off from pursuing the H20 controls in exchange for Nvidia investing in data centers. The company just announced that it would build up to $500 billion worth of AI infrastructure in the U.S. over the next 4 years, a figure that includes plans that were already underway. A representative for the White House didn't respond to a request for comment. Now, I have to ask here, does that mean that this was kind of a deal, right? At that $1 million Mar-a-Lago dinner, Nvidia says, we're going to build a $500 billion supercomputer in exchange for you letting us sell the H20s. Well, now that they can't sell the H20s, does that mean the $500 billion of infrastructure investment is off the table? Or is it still on the table? I don't know, but I've got questions. Now, look, guys, apparently this story is older than Bloomberg is suggesting, because we got this one from Walter Bloomberg, who is basically a parrot for Bloomberg terminals on Twitter. Nvidia kept some China customers in the dark about new U.S. chip clampdown, sources say. And they're saying here the U.S. chip maker disclosed on Tuesday that American officials had informed the company on April 9th that its H20 chip would require an export license for sales to China. April 9th is the same day as that article about the $1 million dinner at Mar-a-Lago and the fact that the H20s were going to be allowed. So apparently the company knew the day that story was released that it was BS, or that at the very least that the story had completely changed. Goes to show you how fast this news cycle is moving here, guys. And Nvidia stock is down mark of the beast for a second there. It was down 6.66%. We'll say 6 2/3% lower, $104.68, off by $7.50 this morning. Rough morning for Nvidia shareholders. And it gets rougher with this news from ASML. Critical chip firm ASML misses order expectations amid tariff uncertainty. This one just hit the tape this morning. Dutch semiconductor equipment giant ASML on Wednesday missed order expectations and said that uncertainty from new U.S. trade restrictions may affect demand for its critical chip-making machines. ASML said net bookings, a key indicator of order demand, came in at 3.94 billion euros. That's about $4.47 billion. For the first 3 months of 2025, that was lower than the forecast for 4.89 billion euros from analysts. So that's not just a small miss there, guys. By almost a quarter they missed. Shares of ASML were down 5% Wednesday morning. In comments accompanying the results, ASML CEO Christophe, something French I can't pronounce, said that demand outlook remains strong, with artificial intelligence staying a key driver. However, he added that uncertainty with some of our customers could take the company into the lower end of its full-year revenue guidance. That is a warning. If they're saying and now we could move into the lower end of our revenue guidance, if this decline continues, then they'll be lowering their guidance eventually. They haven't lowered their guidance yet, though. I'm speculating there a little bit. Look, this was a big miss, and this is orders for factory equipment. All right. So if the factories that make this stuff are ordering less equipment to make the stuff, what does that say about projections for demand for this stuff in the future? Obviously not very good. Another indicator that this AI bubble has already peaked and is now in decline. ASML holdings down 5.25% ahead of the opening bell here. Well, I guess these are European. No, these are shares trading priced in USD on the NASDAQ. So this is ahead of the opening bell. 5.25% lower, $647.06. Guys, bad news here for the chip stocks. Semiconductors across the board. Let's just look at what the SMH is doing right now. That's the semiconductor ETF that Van X puts out. That's down 4.5%. So sharply lower for that one. Let's look at some satellite names like an AMD. Are they being dragged down along with Nvidia? Yes, AMD even worse, 6.25% lower. How about an ARM Holdings? That's another one of those AI, we'll say, bubble stocks. It doesn't want to come up. It doesn't want to show me a quote for ARM. Come on, Yahoo Finance. There we go. ARM Holdings lower by 5.3% as well. So chips down across the board, guys. This Nvidia story, besides the fact that it shows you chips are caught in the crossfire, again, I can't emphasize enough how quickly the news cycle is moving here. That's a big freaking deal because that story about the H20s being allowed, it just broke on April 9th. Which is allegedly the same day Nvidia found out they can't sell the H20s. And by the way, there was rumors going around on Twitter for quite a while that somebody was making very big bets, buying a metric crap load, to speak scientifically, a metric crap load of puts in Nvidia stock. And this was about a day or two ago. And now this story breaks. I wonder, did somebody know a thing? Is there maybe some people trading on material, non-public information? What? White-collar financial crimes? No, not in this market, right? I just want to say thank you very much to Will Yang. Thank you, Will, for supporting the channel. He says, what's important, save America or contain China? I would call that something of a false dichotomy, to be honest with you. Contain China, I don't really care, to be honest with you. I think the Chinese are so full of bad ideas that that's a self-correcting deficiency. You know, I don't. They are engaged in one form of genocide or suppression or oppressive behavior with their own population in all four corners of their own country. I really don't think China is going to be around that much longer. I know a lot of people laugh when I say that, but I look at the demographic collapse. I look at the unemployment among youth in China. I look at the real estate market collapse, a banking system that's avoiding price discovery. Things our banking system does as well. I'm not so sure China, in its current form, the Chinese Communist Party ruling the country, will really be around all that much longer. So contain China, not really high on my priority list, to be honest with you. I think the only thing we really need to do to contain China, if you will, is not let our own military completely atrophy, not project weakness. As long as we do that or we don't do that, I think China will that problem will solve itself. Save America, I would say save the American middle class. All right, that's the important thing. Save America means something different depending on who you ask. All right, when I hear save America, I think we need to bring back manufacturing. I think we need to bring back American production. We need to provide good middle class jobs. The dignity that comes along with a paycheck solves so many of the problems that we bicker and fight about. The absolute squalor conditions that are running rampant in cities all over this country are completely unacceptable in the world's largest economy. The people who are telling us everything we're doing with tariffs is so insane and so crazy, and it is, but they're also the people who got stupidly rich off of putting all those people in tent cities by outsourcing their jobs and then gaslighting the hell out of them saying, oh, what's the matter? You can get a toaster for $9 at Walmart, even though you live in a freaking tent. Why don't you understand how good you have it? What do you think people want? $9 toasters or a roof over their heads? Just throw that one out there. Thank you very much, Will Yang, for supporting the channel. Thomas Short Read. What's going on, Thomas? You just became a YouTube member. Welcome to the Melonheads, Thomas. I appreciate the support of the channel. And thank you so much. By the way, shout out to all my Melonheads and magnanimous Melonheads on YouTube. Thank you guys for everything you do to support the channel. Harmonair LLC says, show some respect, meaning stop being a bully, aka China weakness, or bend the knee, plebs. Look, diplomatic rhetoric, obviously not a strong suit of the current administration. I think that's to put it mildly. That being said, have you ever read some of the statements that come out of the Chinese government? I mean, gag me. All right. Like, who wants to cast that first stone? I mean, China, a number one super dragon, America, puny, blah, 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 blah. Look, they're all a bunch of clowns, to be honest with you. Our guys, their guys, leadership in general. We're caught in the middle when they fight. Here's the thing. It's the first willingness China has shown to talk. And they're throwing all this, well, you have to be nice. You have to stop saying mean things. Donald Trump is not going to stop saying mean things. He might change who he's saying mean things about, but the guy is a big mouth, and he's like almost 80. This is not the time to turn over a new leaf in life, all right? He's not going to stop saying mean things. Now, he might change who he's saying them about. Remember, once negotiations start, Trump goes from saying weak man, little Winnie the Pooh, all this other stuff, to saying, oh, he's a great leader, and he's just doing right by his people, and he's trying to get the best deal possible. And so, watch him turn on a dime. When the talks finally do start, you are going to see that go away. Unless the talks don't go well, then it's going to come ripping right back, all right? It's a volatile regime in the White House. More news at 11. Thank you for supporting the chat, Harmonair. Armando Reyes says, rumors are gold to hit 4,000 by the end of the year. As of right now, you cannot buy 3 ounces without filling out paperwork to report it. Talking about that threshold with the IRS, making it a reportable transaction. Yep, gold is heading higher here. Look, price targets in gold, price targets in general are pointless at this point because there's so many big variables, right? 145, 245% tariffs. Maybe it'll be 500 tomorrow. Who knows? You can't make projections in that environment. So the one thing that I can say is uncertainty is not going anywhere anytime soon. And as long as uncertainty remains the biggest force in markets, gold will continue higher. If we do get some kind of big breakthrough in this trade war and, give peace a chance prevails and we all start playing nice in the sandbox again, gold probably going to sell off if that happens. So that's a risk, guys. As always, be careful on leverage. And thank you, Armando, for supporting the channel. Nashville Pasta Man, what's going on, brother? He says, moderators working overtime. You're on someone's radar. Yeah, every time I say something mean about China, I get the trolls, they come in. And look, I took plenty of cheap shots at Biden when he was in charge. I take plenty of cheap shots at Trump now. In the same day, in the same hour, in the same minute, I could be called a libtard. I could be called a MAGA in the same breath. I speak my mind, guys. I call it how I see it, all right? And I do not toe party lines, all right? If I wanted to toe party lines and just say what is fashionably in vogue to say and not ruffle any feathers, I'd still be working my stupid corporate job. I don't do that shit, all right? I got a big mouth. There's no governor on this thing. It's just how I roll. So, look, just because the guy I voted for is in charge does not mean I'm not going to call him out when I don't like what he does. So that's what I'm going to do. And I think giving carve-outs, like I was saying earlier this week, giving carve-outs to big businesses while small businesses get stuck with 145, 245% tariffs, whatever, I think that's entirely hypocritical, counterproductive, bad policy. When I see it, I'll say it. All right. That's pretty much what it comes down to. By the way, shout out to my moderators. Thank you guys for everything you do for the channel. Being a moderator is a thankless job. They do it willingly. They're awesome. So thank you guys for everything you do for the channel. Mish, M&J, Nan, all you guys, you rock. Thanks again, Pasta Man, for supporting the channel and living our destiny. Don't forget to like and subscribe. Well, thank you for using your Melonhead Super Chat to suggest everybody do all those algo-friendly things. You got to offset all those Chinese bots that are downvoting me into oblivion. You got your work cut out for you there. Thank you so much, Living Our Destiny, for being a Melonhead. Pigos Trading Desk says, hit Yellen calling manufacturing a pipe dream. Well, I just want to say that this trade war is the largest self-inflicted wound that the United States has ever placed on itself. And it's a pipe dream that the United States would ever reshore its manufacturing base, just like it was a pipe dream that Drill Baby Drill would ever make the United States the largest producer of energy in the world. What? Oh, the United States is the largest producer of energy in the world? well, then just maybe I'm full of it and I don't really know what I'm talking about. And I'm just an academic bureaucratic hack. And my real goal here is to just collect speaking fees at the expense of the working class, which I have helped to destroy in my long and prosperous career. Well, thank you, Secretary Yellen, for that unusual bout of honesty. You know, I tell you, when Janet comes on the show, she really just she lays it all out there. She puts herself out there. So thank you, Janet, so much for your candor on the matter. Now enjoy your retirement, you wretched human paraquat. Also, shut your hole. All right. Thank you very much, Pigo, for queuing that one up and supporting the channel. Wally, what's going on, Wally? He says, the way you're going to confiscate our wealth is through tokenization. Interesting thought. It will be great at first, but after your assets are on the blockchain, you'll be a heartbeat away from losing it all should you not toe the party line. Kind of like drifting into a little bit of social credit scores there. I could see that. Look, you can already lose everything for not towing the party line. I mean, if you say something that upsets the wrong people, you make yourself a target. And there's so many laws and rules that everybody is guilty of something, whether intentionally or accidentally. So pretty much, I mean, if you run afoul of they with a capital T, they're going to figure out a way to take what you got, or sure, at least bankrupt you while they try. And even if they're wrong, legal fees, attorneys are really freaking expensive. They can put you in the poorhouse, even if they're wrong, and they know it. So tokenization, yeah, maybe it's a step down that way. I don't like the whole idea of social credit scores. And, you know, the conspiracy theorists, we put this on. There's a lot of people are saying like this real ID thing is a step in that direction. I haven't really read too much into that. I'm just honestly loathing another trip to the DMV more than anything. It's a libertarian's nightmare, that place. That being said, guys, it's the 2020s, and let's not put anything past they and what they're capable of. See also Epstein, see also creating plagues on purpose in labs, and yes, the intentional gutting of the middle class via outsourcing, all while telling us you're welcome. Let's not put anything past them. We're only halfway through this decade, guys. There's plenty more 2020s in front of us. Thank you so much, Wally, for supporting the channel and for the tinfoil hat opportunity there. And thank you, everybody, for having your coffee with the Melonheads this morning. You guys rock. Don't forget that like and subscribe stuff on your way out. That's all good for the channel. Don't forget to hit us up on Spotify as well. Thank you so much for the generosity and the super chats. You guys rock, as well as you, my magnanimous Melonheads, on Patreon and YouTube. Links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.